Get to Bob Pisani. Hey, Bob.
Yeah, that's about the only weakness, Carl. We have a mercifully flattish open after a confusing and really difficult trading week. Remember, we've got quadruple witching today. We're going to have a lot of volume toward the close. But take a look at the sectors. And as I said, mercifully kind of on the flattish side, nothing really tremendous. You see the banks are weak here. I think that's important here. Let's just put up some of the banks here. And as Carl said, the Fed is not going to extend that SLR rule. That's that pandemic crisis rule that allowed banks to relax their capital levels. So there's some concern here that the banks might have to apply more capital against their holdings. Maybe they'll have to sell treasuries. Maybe they won't be able to buy back as much stock. There's a lot of vague concerns about this, but you can see some nominal weakness. The bigger issue is just the confusion this week. I mean, it's just been head spinning to try to figure out what the trends are this week. So remember, the main narrative was pretty simple. Starting this week, inflation replaced COVID as the primary market risk. Everyone came into the week saying, thank goodness, COVID's behind us. Now we have to deal with inflation. And yet yesterday we got smacked in the face, reminded with these European lockdowns in Paris and in other parts of Europe that COVID's not gone away, that there are variants that may be very difficult in the future. And that created other problems in energy stocks that had been rallying. At the same time, we've seen these value stocks. Suddenly they've become momentum stocks. The question is, does that keep up or not? Or do we go back to growth? Nobody quite has a lot of conviction on many things except the idea that rates are moving up. So if you just look, the good news is big cap tech stocks haven't been damaged too much this week. By and large, the declines have been fairly modest here. You see 3-4% declines, and even Apple's just fractionally on the downside right now. The other sectors, the thematic tech ETFs that everybody loves, those clean energy stocks and the gaming stocks, the cloud computing stuff, and Cathie Wood's and ARK Innovation, if you put that up, they've been hit a lot more. So ARK Innovation was down about 5%. If you put up that next one, you see those declines are more notable. And that may be an issue. But these people tend to get in and out very quickly because they can with the ETFs. The value stocks have become momentum stocks. Now, energy stocks got hit badly yesterday, but by and large, a lot of those mid-level consumer names, the McDonald's and the Mercks and the Whirlpools of the world, put that up there, they were hit. And had rebounded nicely. They've held up well this week. GE's having a fairly good week. So in the last month, these value stocks have become momentum names. The reopening trade, by and large, is continuing with the exception of energy. So airlines and home builders and autos are doing pretty well on the week, if you take a look at that. I think the main thing here, it's put up that final full screen, is that everything is speeding up a little bit, Carl. There's been hyper acceleration in trading. It's not the speed of trading that's changed. It's that the retail traders seem to have access to a lot more data. And the result, the trading activity is much higher than it was even a year ago. And, you know, there was a joke going around, Carl, that eventually what's happening here is my artificial intelligence trading mechanism is going to interact with your artificial trading intelligence mechanism in the future, and they're all going to be really smart. Maybe, Carl, it's not going to be Renaissance Capital smart, maybe not James Simon smart, but my AI trading device is going to get darn good, and they're getting a lot better, and traders have access to more information, and as a result, they're trading more, and there's a feeling that trading is just speeding up. That's one thing that I hear from the trading desk all the time. Very hard to get your head around it, but change is happening really fast.
Shepard Smith here. Thanks for watching CNBC on YouTube.